I'm not sure, but for a quick scenario, we could have some kind of a financial crisis, shut down the banks like in the 30s for a couple of days, come up with a central bank digital currency, go into your bank, get your retina scanned, get in the new system. And by the way, for everybody that's lost their job or whatever, we've got a basic income, and all you have to do is sign up and jump on board the new system. And the new system, they could basically wipe the slate clean, blame it on cyber warfare, and they don't know who attacked the bank. So sorry, but we're going to make it good. We'll kiss you and make up and move on. And
why do you think gold doesn't just, do you not think it can march up to, 4,000, 4,500?
Well, it will, but I think all markets back and fill. That's a commodity term, and I think that gold is kind of due. And if you look at a short-term basis, gold has basically gone parabolic or an exponential function for a very short time. It's just the way markets move. I could be wrong. Certainly, I don't think the correction in gold is going to be that severe, but it could be momentarily. Remember, the function of a bull market is to shake off as much as possible.
Right.
And so very few people hold on to that bull all the way up. And that's one of my main jobs, to help my, people that subscribe to the Morgan Report hold on, because I don't want anyone shaken off as this market unfolds into the eventuality of wherever gold goes. And I do think silver will catch up. It's just that it's going to happen very rapidly, most likely very rapidly, and it's going to happen in the market. So gold's going to lead for a while longer, and then silver will start to catch a bid and move on. Once we get above $50 silver, and I believe strongly that we will, then what silver really holds. I would like to point out in that video the Achilles heel, silver's the Achilles heel, that I go on and on about what we discussed, but near the end I talk about what's the most. And I said, all that aside, no matter how much real money you have, gold or silver, it pales against freedom. And without freedom, it really doesn't matter how wealthy, because it's priceless. And I make that point because it's probably the most important thing to me, and I think it's the most important thing to a lot of sound money advocates. And I want people to really, really think about that. I made that video 13 years, and I was seeing ahead. And the thought I saw was where we are now, which the central bank digital currency that's being proposed all over the place is an absolute totalitarian control mechanism with technocracy and an AI backup. It's going to basically control our lives. So I just wanted to say that as a final thing. I'm not trying to scare anybody, but freedom isn't free. It takes diligence. We have to be able to push back. We have to be able to stand up, and we have to be able to.
Now, I know a lot of you watching are thinking, David, this is starting to sound like a dystopian sci-fi flick. And I get it. Central bank digital currencies, AI surveillance, retina scans at the bank just to access your own money. It's not exactly the bedtime story you want to hear before drifting off to sleep. But the reason I bring this up, and I emphasize this with every fiber of my being, is that it's no longer theoretical. It's no longer some fringe concern whispered on survivalist forums or passed around gold bug newsletters. It's here. It's being discussed at the IMF. It's being trialed in dozens of countries. And here in the US, they've already begun test driving the FedNow system as the infrastructure. Let's be clear about something. A central bank digital currency is not just a new form of money. It's a new form of control. The entire architecture is programmable. That means it's not money in the traditional sense. It's conditional credit. Oh, you didn't hit your carbon quota this month? Sorry, your spending is restricted to approved green vendors. Or, you donated to the wrong political campaign? Oops, your account's been frozen for review. That's not monetary innovation. That's behavioral enforcement through financial chokeholds. And this is where silver and gold come in. Not just as investments, not just as insurance, but as weapons of financial resistance. Now, some of you might ask, but David, what good is gold and silver in a digital world where they can just turn off your money with a click? Great question. And here's the answer. Because gold and silver are outside the system. They are bearer assets. They don't need a bank. They don't need a password. They don't need electricity. They are, in the truest sense of the word, freedom money. And I want you to think about that phrase, freedom money. Because the moment the monetary system becomes conditional, programmable, and centralized to the point of digital surveillance, the only money that matters is the kind that resists coercion. We've already seen what happens in countries where trust in the financial system collapses. Just look at Argentina, where inflation is running rampant and physical US dollars and gold jewelry have become a parallel economy. Or Turkey, where the lira has been pulverized by bad policy, and demand for gold and silver soared so high they had to ban imports temporarily just to protect their trade balance. And let's not forget Nigeria, where CBDCs were launched, and rejected by over 99% of the population. Why? Because people instinctively know when they're being cornered into a digital pen. The powers that be would love for us to stay distracted, fighting over Team Red versus Team Blue, while they roll out the true bipartisan project, total monetary surveillance. But as I've said for years, silver is not just a monetary metal, it's a mirror. It reflects the truth about our financial system in a way no manipulated CPI report or Wall Street talking head ever could. And here's what silver is reflecting now: distress. Take a look at COMEX inventories. Physical deliveries have surged in the past few months, not just gold, but silver too. When the May contract went live, we saw record contracts stand for delivery. That's not speculators playing games. That's big money demanding real metal. They don't want cash settlement. They don't want futures rolled over. They want bars in hand. Why? Because trust is breaking. The futures market used to operate on the belief that only a small percentage of players would ever take delivery. But what happens when more and more of them say, you know what? I'll take the metal this time? That's not just a logistical problem. That's a systemic threat. We are watching a slow-motion bank run on the paper gold and silver system. The kind where the insiders are quietly heading for the exits while the media tells you everything's fine. And let me get to another point that doesn't get nearly enough attention. The US has become the world's top gold importer. That's right, the country with the strongest economy in the world, the issuer of the global reserve currency, is importing physical gold like it's going out of style. Now ask yourself, why? Are they preparing for a new system? Are they refilling empty vaults? Are they trying to regain credibility in a world that's shifting eastward in terms of gold flows? Whatever the reason, it's not because they think gold is a barbarous relic. Now, let's talk silver again. Everyone always wants to know, when is it silver's time? When does it finally move? Here's what I tell them. Silver doesn't move. It erupts. That's its nature. It's been artificially suppressed for so long, it builds up pressure like a dormant volcano. And when it moves, it doesn't give you a nice, gentle warning. It gives you a vertical chart that makes headlines. The setup right now is unlike anything I've seen in my career. We're seeing monetary expansion pressures, geopolitical fragmentation, energy inflation, and a breakdown in institutional trust, all at the same time. The gold-to-silver ratio is still hovering in the 80s, way above historical norms. That's your signal. Silver is cheap. Silver is overlooked. Silver is undervalued relative to gold. And when that reverses, and it always does, the velocity is astonishing.
A few years back, I did a speech titled, Why Silver is Not Treated Like Gold, or something along that. It was a little better title than that. But the whole point of the speech was that silver had been demonetized in the late 1800s. And if silver were treated as a monetary metal, then you would have a whole different gold-silver ratio and a whole different dynamic, because gold is really an establishment metal. Now, you won't hear that on the main financial channel, but it's the show me, don't tell me adage. Look, central banks have been buying gold hand over fist for quite some time, but especially the last 3 years, probably gold. And on that, I've been on many interviews, as you know, I get almost every week, and I'm grateful for that. But I was probably the first, I believe the first, to say the run to gold has begun. And that was around the $2,000 gold level. And I said the reason the gold run has started is because the central banks are buying in such large quantities, relentless. And that the run to gold starts with a very benign walk, kind of a shuffle, then a full walk, and then a brisk walk, and then a light jog, a full jog, a slow run, a fast run, and then a sprint. And that's the analogy for the run to gold, going from the stealth mode where only the smart money central banks are buying it like crazy, and the public is ignoring it, not even aware of it. So now we've gone into probably the brisk walk phase, and the public is waking up, but they really aren't participating. Coming back to silver, if silver held the esteem that gold does within the established bank, treated as a monetary asset, reserve asset, it would be a different story. And that was the whole point.
But overall, an incredible climb for gold. Do you think that the metal is finally liberated?
That's a tough one. It's an opinion only, Danielle. I can't give you a fact, but it's certainly acting that way. Silver has acted that way as well, but it's rare. When we had the 2011 high, when we got around the 30 level or so, I mean, we quickly went to 50, and that was basically the paper traders got beaten for a while, a short while. Gold is a bigger asset again, widely based. And I think part of it has to do with this Fort Knox situation where we're going to go audit Fort Knox. Whether we act remains to be determined, but I think there was a scare in the market where the cover ratio for paper to physical was a mismatch. And so a lot of gold was coming in one direction to kind of fill the shelves if it was required. That's my guess. So I would lean toward the idea, yes. But I think it may be a temporary event. And I honestly think you may be asking me, but I think we've topped out in gold for a little while. I think we may see the summer just kind of go sideways to down. That's kind of a minority view. It's a contrarian view within a contrarian asset. But
why are the elites so tied to fiat currency? Why can't they accept gold and silver?
Well, it ties their hands. You cannot, create it out of nothing. It's not a digital world. It's a physical world, and it's a limit. And of course, you can have inflation under a hard money system. It's happened. When you get a huge gold strike, the money supply increases. I mean, the conquistadors in South America in the old days got all kinds of silver, and it caused inflation. It's an increase in the money supply is the true definition. But overall, in the long term, there's nothing that really works as well as a bimetallic standard. And this is why silver is really important for a hard money standard. I'm going to digress a moment, but there's a paper out called Gold Standard equals Fiat in Disguise. And this gentleman talks about a gold-only standard always with fiat only. And there's no limit on a gold-only standard once it flips to fiat or a fiat equivalent. How many dollars does it take to buy an ounce of gold? Go back to 1913. Silver's demonetized officially in 1873. So in 1913, it was $20.60 the ounce. Now it's almost $3,500. What happened? If it's a constant, the dollar paper would be the same amount today. Gold would be the constant, but it's not. Gold, the metal is constant, but the paper deteriorates over and over again. And that's the path we're on. And we're going to get to the end of that game here in the near future.
The interesting thing about silver is that it doesn't just reflect the monetary decay. It amplifies it. Gold whispers, but silver shouts. And for those who have ears to hear, silver is shouting now, loudly, because the entire financial edifice, built on debt, inflated promises, and synthetic leverage, is trembling. And silver, which has been the most suppressed, manipulated, and overlooked asset in the entire monetary complex, is about to reassert itself in a way that will shock even the seasoned veterans. You think the 1980 run was impressive? You think the 2011 spike to $49 was dramatic? Those were trailer previews for what's coming. When we get through the paper price suppression, when the physical market starts to price in reality, the shortage of above-ground inventory, the explosion of industrial demand, and the complete lack of institutional ownership, that's when you're going to see the price not double, not triple, but potentially go parabolic. And people always ask me, David, what's the trigger? I say, it's not a single trigger. It's a minefield. It's an accumulation of shocks that converge, a bond market dislocation, a currency devaluation, a geopolitical black swan, a banking crisis, a failure to deliver on COMEX, a new BRICS currency, a sovereign default, a CBDC rollout gone wrong. Take your pick. We're not in normal times. We're in the late stages of a global monetary regime that has reached its limits. Negative real interest rates, central banks buying their own debt, trillions printed out of thin air. And the only thing they can offer is more of the same. More inflation, more control, more lies. But guess what silver does? It doesn't just preserve your wealth, it exposes theirs. That's why the mainstream media won't talk about it. That's why Wall Street won't touch it. That's why central banks love gold, because they control it, but they fear silver. Gold is the king, silver is the rebel, and let me tell you, the rebel's time is coming. Now, let's talk about premiums and availability. We've been seeing a curious bifurcation. The spot price, that's what the manipulated COMEX shows you, tells one story. But the physical market, that's a different story altogether. Try walking into a bullion dealer and buying 1,000 ounces of silver at spot. You can't. Not without paying premiums north of 30 to 40%, especially on sovereign coins. That's the market telling you the truth, not the screen. Dealers are having a hard time sourcing inventory. Mints are reporting delays. Allocations are shrinking. I talk to industry insiders weekly, and the word behind closed doors is the same: tightness. If this were any other commodity, prices would already have gone vertical. But because silver sits at the intersection of monetary history and industrial necessity, they're terrified of what happens when it breaks loose. Think about it. Silver is not just a monetary metal, it's a strategic resource. Solar panels, electric vehicles, medical applications, military electronics, water purification. The list goes on. This is a metal with no substitutes for many of its functions, and yet we're consuming more than we're producing, year after year. The Silver Institute data shows a persistent deficit, but most analysts still treat silver like an afterthought. Meanwhile, governments are waking up to the strategic importance. Mexico and Chile, two of the largest silver-producing nations, are now talking about nationalizing or regulating exports. If just one major producing nation imposes export restrictions, the paper charade collapses because there is no silver glut to fall back on. The inventories are thin, the vaults are emptying, and the scramble will be epic. You know, people used to scoff when we said silver would go to triple digits. Not anymore. Not after they watched nickel trade suspended and defaulted on the LME. Not after they saw gold shoot up while the dollar was supposedly strong. Not after they saw the London silver fix fail in 2020. The credibility of the financial infrastructure has been shattered. And when confidence dies, money flees. To real assets, to gold, and yes, to silver. But let me shift gears for a moment. Because this isn't just about price. It's about principle. Silver is freedom. It's about owning something real, tangible, and outside the digital matrix. And in a world where they want to put your identity on a blockchain, track your carbon footprint, tie your credit score to your social behavior, and restrict your money based on compliance, silver becomes a lifeline. If that sounds dramatic, good. Because the stakes are dramatic. I've said it before, you can have all the silver in the world, but if you lose your freedom, it won't mean a thing. This is why I emphasize silver not just as an investment, but as a philosophy. It represents decentralization, resilience, self-sovereignty. You don't need permission to own it. You don't need a password. You don't need trust in a third party. And that's the kind of money we're going to need in the coming decade. Now let's address the elephant in the room. The Fed. They're cornered. They say they're fighting inflation, but their balance sheet is still bloated. They talk about higher for longer, but real rates are still negative. And more importantly, the US government can't afford high interest rates for long. Every uptick in yields adds billions to the debt service. We're at $35 trillion and counting. You think they're going to ride that out to maturity? Please. They'll pivot again. They'll flood the system. They'll call it emergency stimulus or strategic liquidity, or some Orwellian term that really means money printing. And when they do, you better not be sitting in cash. Because this next wave could be the big one, the loss of faith in fiat itself. It won't be a linear collapse. It'll come in waves, cracks, then floods. Markets will lurch, capital will panic. And when it does, you'll see silver move like a lit match in a fireworks warehouse. Look, I've been in this space for decades. I've watched the patterns, I've seen the manipulation, but I've also seen the resilience of the metal, of the market, and of the people who understand it. Silver is hope. It's the monetary middle finger to a corrupt system. And if we ever want to reclaim our future, not just financially, but spiritually, we have to start thinking in ounces, not dollars. So to those still sitting on the fence, wondering if now is the time, it is. Don't wait for permission. Don't wait for headlines. Don't wait for Wall Street to bless it. Stack, store, hold. Because when this system breaks, and it will, silver won't just be an asset. It'll be a lifeline. And as I always say, you don't own silver to get rich. You own silver so you don't get poor. What most people fail to grasp is that silver, unlike fiat currency, cannot be created at will. It must be mined, refined, and delivered into the market. And that takes energy, capital, and time. That's why silver is not just a monetary metal, it's a store of time and labor. When you own silver, you own the past efforts of human industry and the future scarcity of energy required to produce more. No matter how fast AI advances or how digitized our economy becomes, you can't digitize a silver coin. You can't 3D print it out of nothing. And you certainly can't fake its conductivity or luster. This makes silver the ultimate truth teller in a world drowning in synthetic narratives. Now I want you to think about this. How many times have we been told inflation is under control, that the dollar is stable, that the bond market is strong? And yet here we are, watching physical silver vanish off the shelves faster than bureaucrats can issue a denial. People are waking up slowly but surely. And they're realizing that holding wealth in paper is like trying to hold water in your hands. Eventually, it seeps out. There's a moment that always sticks with me. I had a gentleman once tell me, "David, I bought silver 10 years ago and it hasn't done much." And I asked him, "What has your savings account done?" He got quiet, because you see, the goal of silver isn't to make you rich overnight, it's to make sure you don't go broke slowly. And as we inch closer to this digital dystopia, where surveillance is currency and privacy is outlawed, silver becomes not just a hedge against inflation, but a hedge against control. You can't inflate it. You can't freeze it. You can't click a button and make it disappear. It's yours. It's in your possession. That kind of autonomy is powerful. And in a world built on illusions, it's revolutionary. So as we wrap this up, I'll say this. Don't let the noise shake you off the bull. These pullbacks, these price games, they're designed to frustrate you, to exhaust you, to get you to walk away just before the sprint. But if you understand what silver represents, real money, real value, real independence, then you won't just hold on. You'll double down. History doesn't repeat, but it often rhymes. And the next verse, I believe, will be written in silver.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.